And now for something completely different.
It's a rich man's world.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
And good morning, everyone. Hey, we're glad you're here. Welcome to Financial Fitness Friday. The show Lance really doesn't like to talk about, but trolls us on YouTube. So you can always tune into our YouTube channel and get our latest insights. I'm Rich Rosso, certified financial planner here with Danny Ratliff. CFP, as we always say, CFP squared. So, I don't know about you, Danny, but I'm glad the week's over.
Is it over? I feel like it's Wednesday. Just on a loop.
Yeah, that's true. It's like every day is Groundhog Day, right?
Yeah. Fun stuff.
Fun stuff. You know, I am, and I guess, Danny, you've been through so many cycles, but I've been through so many cycles that these kinds of moves don't really faze me. What I try to do, like we all try to do, is put ourselves in the shoes of clients and people who reach out to us. And I know you too, you've had a lot of people that are not clients that reach out to us for help, and we help them on all different types of questions regarding the turmoil. And it's really always important to be the voice of reason. And I don't think, I try is to be not to be overconfident. And I think that a lot of financial advisors, because they're immersed in this, really think they know what's going to happen next. But we all know, and we've talked about this, how the market is the great humiliator, right? It can get you down on your knees. The greatest traders, Jesse Livermore, talked about how you have to respect markets and understand that when they tell you something, you better listen to them. And I think that for me, and I want to just set this up. The first part of the couple of segments we want to talk about, what should you do? You're in the shoes of an accumulator, or you're in the shoes of someone taking a retirement income. And we want to look at those both sides of the fence. But for me, I spoke to somebody yesterday, a friend of mine, and he's been only in the market, believe it or not. I think you mentioned this the last show, Danny, how people, or Wednesday's show, how people got out of the market in 2008 or 9 and never went back. Mm-hmm. Well, he's one of those guys. And he just started to get in this year. This year, he starts to get in. And January was sort of a continuation of December, looked really great. And then, the world started to change, right? He says, man, he goes, this is a 40-year-old guy. And he's like, I can't believe it. I wait all these years and now I'm going back into the market. I'm like, well, listen, you've got to know, you told me you're going to retire at 75. What's the problem? Right? Oh, well, everything's down. And, I said, okay, yeah, you did miss a great bull market, and you're probably going into a bear market. But if you have a strategy, rules, then I would suggest today, because you still have a lot of cash, she's only about 10% invested, add another 5%. And, there was that dead silence. I thought he was disconnected by now, but by low. There is something, and Danny and I hate Wall Street cliches, but when there is blood in the street, and I don't think there's enough blood to say that things are capitulating, but there is at least a trickle of blood in the streets. Why don't you slowly buy in? Any thoughts? Here's an accumulator who hasn't been in the market for over 12 years, decides to go in. And when he wanted to go in January, Danny, he wanted to go in, to give you some big picture, he wanted to go in with 100% of $500,000. And I'm like, well, that's not a good idea. You're telling me that you haven't been even out on the track and you're going to run a marathon tomorrow. That doesn't make any sense. Why don't you try 10%? And then at the end of January, he was bothering me like, oh, well, see, I should have done it all. And I was like, how you feeling now? These emotional whipsaws, especially for people that are unfamiliar with how cycles work, really can take a toll.
Well, I think that we're seeing this because we see it in real time. We're seeing this day to day. You're looking at it when you pull up your online statement. You get news in the morning. Most people hop out of bed, Rich, and they're looking at their phone, and you got all the news of what's going on in the world. And usually, the headlines: markets are down 1,000 points. Well, yeah, that is significant, right? And look, I don't want to take this and sound harsh in any way, because I do understand this is it's your livelihood, it's your security, it's what you expect that you're going to be able to use for the rest of your life, and so it is very important.
Yeah, we're not being flippant about it at all.
But it's also very important to understand that as bad as even yesterday felt, we're still higher at the moment than where we were at the beginning of the week in the S&P.
What?
Yeah, if you look at its worst on May 2nd, we were lower than 41.46. We got all the way down to 40.74. So I just want to put this in a little bit of perspective. While it doesn't feel good, everything's whipsawing around. We're seeing stocks, bonds. There's been no safe haven other than cash.
Right.
And we talked about, it's interesting, the psychology around all these things. We raised some cash in January and beginning of February, and as we were doing so, changing portfolios, some people say, "What are you doing? The markets are great. Why would we get out?" And, granted now, it's not enough. We wish we had a whole lot more on hand. But that would give you the opportunity to start stepping back in with selective, very surgical areas that you can look to invest in and potentially do well. And now, nobody's trying to catch a falling knife, but there are still areas that have held up okay in this environment. Not many.
No, I agree. And listen, if you buy individual stocks, you may have a different mindset than if you're buying ETFs. Like we do a lot of sector rotation work. Investments get overbought and oversold very quickly. You have big up days and big down days. Those are all the marks of bear claws, and not the real cool ones filled with cream and stuff that I really like, that I'm hungry right now, but actual bear claws, right? Bear markets have this type of behavior, this rolling down a bloody hill kind of thing, where you get great up days, you get great down days. And like you said, Danny, if you take the perspective of we just pretty much immunized the up day with the down day, we pretty much wiped it out, right? We had this huge up day, which I really didn't understand except for short covering. And then we just took it all the way when people realized that the Fed's an idiot as one cohesive group. And they are really behind the curve. The more and more information that comes out about inflation, for example, Bloomberg had a report about Nutrien, which is one of the biggest providers of fertilizer, that they are going to see disruption in production of fertilizer through at least 2023. You're talking about the reduction of use of fertilizer by 20 to 25% because of what's going on in Ukraine, which means reduction in output of rice and wheat and corn. This is not a transitory issue, depending on how you define transitory. And the Fed is behind the curve. The ECB came out this morning, Danny, or last night, and said, listen, we got to be more aggressive to raise rates here. We get back. We're going to continue on this discussion here, Financial Fitness Friday. Thanks for tuning in.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
How do the richest people in the world invest and protect their families? Richard Rosso and Danny Ratliff's next virtual Lunch and Learn on the truth about life insurance will show you how to insure your income, minimize your taxes, and protect your real estate. Thursday, May 12th at noon. The most important insurance policy you'll ever own is the one you'll have when you die. Register now for the Truth About Life Insurance Lunch and Learn at at realinvestmentadvice.com. The truth about life insurance with Ratliff and Rosso. Realinvestmentadvice.com.
Do you know what you don't know when hiring and retaining quality employees? Compensation is more than just wages. It's personal time off, the vacation days, healthcare benefits, a 401k. Do you know what's important to them? Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Let us show you how to make the most of an affordable, effective package that will deliver true value for your business and your employees. Call me toll free at 855-RIA-PLAN or online at realinvestmentadvice.com.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. RealInvestmentAdvice.com. Click on the insurance tab.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
Hey, a shout out to our YouTube people, and I want to tell you something. If CB Radio comes back, I am taking Tickle Pickle as my handle. Breaker, this is the Tickle Pickle. I'm going double nickels. See you on the flip side. Tickle Pickle, 10-4.
Can't take you anywhere.
You forgot the...
Yeah. What's his name? McCoy? Who sang?
C.B. McCoy.
C.B. McCoy is rolling around in his grave right now. Mm-hmm. He's going 10-7 for you, buddy. Look it up. 10-7. Out forever. This market is a crazy train. It's the Johnny Depp Amber Heard market. It's as crazy as that. No offense. You can watch CNBC, Crazy Train, or the Amber Heard, Johnny Depp trial. Same thing. There's not much difference. Be as crazy. Okay? But you are the observer, and you have to keep your level head. And it's tough. It is absolutely tough through bear markets, especially for a generation who have never seen it, and for a generation who believes the Fed's going to come in and bail them out. And this Fed cannot bail them out. These global banks cannot bail them out. So it's going to go back to something really primal and basic, but unemotional, if I can say that. It has to go back to rules, Danny. You have to sit down as whether you're an accumulator or a distributor and say to yourself and step back, what are my rules to buy? What are my rules to sell? What's my time frame? What do I hold? Is it fundamentally sound for the period I need it to be? It's a very surgical, clinical analysis that may be very tough for you to do on your own. And that's where your financial partner. Now, I don't like the advice, Danny, that don't worry, stocks always go up. I hate the advice, go sit on a beach somewhere, let us worry about it. Listen, the people who have the most wealth are the ones who worry about it. A little bit of stress about your money is, I've noticed, Danny, those people that are a little stressed out and concerned and watch it and are observant build the greatest wealth, as opposed to the people that fly by the seat of their pants.
Yeah.
It comes down to rules and a strategy, and you got to have that. And even if you've never created them before, there is no better time for you to either sit down with your significant other or your financial partner and create those rules. You have to, on a crazy train, you got to strap yourself in and analyze the situation. And again, I'm not saying it's easy, Danny. I think it's somewhat easy for us because we could step outside it a little bit and understand it and look at cycles the way we do and what's underneath the surface. And we're going through the rubble right now trying to figure out where are going to be the opportunities that people are not going to want to buy into, right? How do we have to change up strategies for this environment possibly? We're not perfect. We're not right all the time. We understand that. We're willing to change our minds when conditions change, right?
Yeah, and I think that's the important thing is to understand that you can't, there are times that you're going to be wrong. You're going to have to make changes and decisions. And, the markets are, like you said, this is the Amber Heard, Johnny Depp market, and nobody knows what's coming next. And if somebody tells you they know exactly what's going to happen, they're full of it. Number one.
They're full of Amber Heard.
Well, we know.
I'm not going to go there. Yeah.
No, we can make some very educated decisions and
Yes.
use some experiences to certainly shape those and understand as far as what markets are doing. But, at the end of the day, we need to follow, the basics and get back to that. And I think that's the important thing for most people to understand. It is healthy. It's okay to have concern over what's going on in the world. But we also need to be cautious because we so often want to rationalize all of these things. And sometimes they just don't make sense. Sometimes the market will do things that they shouldn't, technically be doing. And that'll happen from time to time. But what we usually always see is that it always comes back to where it should be. And what we mean by is we're always going to see the reversion to the mean. We're always going to get back one way or the other. We can get too far oversold, too far overbought, and we're going to see that. Now, is it within the time frame we always want, within that day, that week, that month? Maybe not. Maybe it can go on longer than we anticipate. But that's why we need to be cautious as well and also be patient in some ways.
Yes, and here's the tough part. You have a Federal Reserve and an executive branch of the federal government that are absolutely tone deaf to everything that's going on. We're going to raise taxes, increase regulation. We're going to make energy a political football, and American households pay for the stupidity. Then you've got a Fed that comes out and goes, well, the job market's great, and we're moving slow, but we might think about reducing our emergency procedures. These entities, you are starting to see, and Warren Buffett says this, when the tide goes out, you get to see who's swimming without any trunks. These people are as trunkless as anybody I've ever seen. On the administration side and on the Federal Reserve side. And the market picks up on this lack of confidence, Danny. It picks up on this turmoil as well, which is not helping the overall situation that's going on. I don't know how that plays out, but you're an investor and you are stuck in the middle of this trying to reach your financial goals and provide for your family. And this is a precarious situation to be in right now.
It is. And I'm anxious to see, today the Fed starts making their rounds again. So New York Fed President John Williams comes out this afternoon. Then you have James Bullard, president of the St. Louis Fed. I think these guys, if they have contradictory, kind of speeches, what does that do to the market from a confidence perspective? Because I don't think anybody quite understands where to go. I mean, here we've talked about, we have Jerome Powell comes out, says, hey guys, we're raising rates 50 basis points. We're not going to get too aggressive, and we're not going to disrupt the economy,
right?
Which is completely crazy to think that you're going to be able to continue to raise rates and not disrupt the economy.
Here's what the Fed's worried about right now. New lending rules for lower income areas. The Fed has become and they always have been, but now right in your face.
Well, it's extremely political.
Political animals.
Yeah.
They're going to be concerned more about climate change and, redlining practices. And I'm not saying redlining practices are good. What I'm saying is they got their eye off the ball of the problem that we have right now. Right? There's a series of meteors coming your way, and instead of focusing on the biggest one that's heading on me, I'm going to focus on the one out there by Uranus. That's not an Amber Heard joke. But what I'm saying is the lack of focus, Danny, filters to institutional traders who go, this is the crazy train and the conductors are crazier. And again, you're a family working every day, saving for your retirement, doing all these things, and you're stuck in the middle of this. And you have to be, here's the thing, you have to be the rational voice. You can only control what you can control. You can try to control your emotions, how much you save, things you can cut back on, right? We have Walmart reporting today. Expected to report adjusted earnings of $1.51 per share and revenue of $451 billion. It's going to be really important, Danny, as one of the major arteries of the economy, to see what Walmart is saying about production, supply chain, consumers. So that is going to be a very, very important report for everybody to focus on, don't you think?
Yeah, absolutely. Because this is going to be one of the main staples that, we're going to see what the trends are right now, how people are feeling. Are they continuing to shop online? Are they going out? And to at what pace are they doing that at? And that's going to be interesting to see what that forward guidance looks like, especially as we continue to see the inflation numbers push. Like you've talked about that previously. We're beginning to see Procter & Gamble came out and said, hey guys, people are starting to use more generic store brands versus the big names.
Yeah, we can't raise prices here.
Correct.
Right? People are becoming more price sensitive.
Which is why we do believe we're going to see that disinflationary environment. However, disinflation does not mean there's no inflation. It just means there's less than what there was before. And so that's where we have to be cautious in the sense of saying, nobody's saying there's not going to be any inflation, but it's going to be a while for these things to really kind of smooth themselves out. And we know, look, a lot of this is supply chain driven. You have, you mentioned fertilizer, Rich, and this is a big thing because this is going to impact the price of food. And it's not just Ukraine, Russia. It is also China, which makes the most. They have a large, a big piece of the fertilizer industry. They're no longer
right.
They're no longer exporting a lot of that.
Right.
So there are other issues that are out there. So we can see these food prices go higher. Yeah. Also, the price of getting things from point A to point B, that's going to be one of the more significant costs because of just the logistical problem of how expensive it is to move things around.
Absolutely. You also have major drought bans that are going on throughout the country. Lake Mead. You read that story, Danny, about Lake Mead? They found the barrel? And
they're like, we're going to expect to find a lot more.
They found my Uncle Murray with the gunshot in his head from mid-'70s, 1976, Uncle Money. Well, should be Uncle Vinny. Oh, man, so many of them have been shot. What's really cool? It's a testament to K-mart that's not here anymore, because the actual K-mart clothing that this gentleman was wearing were still sort of intact. That tells me that K-mart had some quality goods, and I'm sorry you're out of business, K-mart. If this only Lake Mead kind of thing would have happened around 1989, you'd still be with us. How I miss you, K-mart. When we get back, we're going to switch gears. Talk a little bit about financial planning up front and then continue on this topic. Hey, you're an accumulator, you go slow. You have your rules. What if I'm taking money out of my portfolio to survive? What can I do then? When we get back, Financial Fitness Friday.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
How do the richest people of the world invest and protect their families? Richard Rosso and Danny Ratliff's next virtual Lunch and Learn on the truth about life insurance will show you how to insure your income, minimize your taxes, and protect your real estate. Thursday, May 12th at noon. The most important insurance policy you'll ever own is the one you'll have when you die. Register now for the Truth About Life Insurance Lunch and Learn at realinvestmentadvice.com. The Truth About Life Insurance with Ratliff and Rosso. realinvestmentadvice.com.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
Good news out this morning. Dr. Anthony Fauci says the pandemic of COVID is now over. So can we please go back to living our normal lives?
Whatever normal was.
So there you go. Mission accomplished. Amazingly, just in time for the midterms.
Of course.
The Real Investment Show podcast. Same show, your schedule.
See, we need to be thanking Vladimir Putin for his invasion of Ukraine.
At realinvestmentadvice.com.
Because it solved the pandemic.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. RealInvestmentAdvice.com. Click on the insurance tab.
Real Investment Show podcasts are now available from Stitcher Smart Radio at Stitcher.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA Advisors to work for you managing your 401k plan. It's a quick and easy application. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The most important insurance policy you'll ever own is the one you'll have when you die. Richard Rosso and Danny Ratliff's next virtual Lunch and Learn on the truth about life insurance will show you how to insure your income and protect your real estate. Thursday, May 12th at noon. Register now for the truth about life insurance at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back. If you haven't joined us on YouTube, the Crazy Train passengers on YouTube, we love them. Listen, I'm not a climate change alarmist, which is somebody's making me sound out to be. I'm telling you there is a worldwide drought that's going on right now. I don't know the reasons for it, and I'm saying is at a time of high inflation and higher fertilizer costs, it's not going to bode well for inflation. That's how I look at it. I'm putting it through the economic prism, not the climate change prism. It is what it is, and it's coming at the worst possible time. Right, Brent?
That's exactly right.
Because we got, if Brent doesn't get his corn chips, we're in trouble.
It's interesting that more farmers are resorting to natural fertilizers than the chemical ones.
You mean CNN? CNN anchors ground into...
Well, that is a form of bull.
Yeah. No, yeah, I can understand that.
There's going to be a boom in poop.
So all that methane is going to cause all this climate change, which means we need the cows, AOC. Need the cows. We need the cows. Something could be a cash cow, life insurance. You don't even think it can. So we're going to be doing our next Lunch and Learn Thursday, May 12th, 12 p.m. Have a little lunch, have a little learn how happy people will be when you're gone because they'll have your life insurance. Like Mrs. Roberts is going to have, when she has that party, we're all going to be invited once that life insurance kicks in.
She doesn't know about that.
Oh, I think she does.
He's still here.
I think the kids do too.
What does Lance always tell me? He's like, when she wants to go to some Hawaiian beach with some stud, you need to stop it. Or something along those lines. But she's got her new boyfriend. He wants to make sure she doesn't blow the money. That's all he's caring about is the money. He doesn't want her to blow the money. That is a financial advisor right there. He doesn't care about the study. He's like, don't have her blow the money, all right? So the truth about life insurance is really important because we're going to talk about it from an educational perspective. No one's here trying to sell you anything. It's more about there are elements to term policies. There are elements to permanent policies. These are roads you need to understand. And I think we broke it down really nicely. We'll break it down really nicely, Danny. The basics of, I think the presentation gives you a really good overview of also our guardrails, RIA's rules that you want to employ when looking for life insurance.
Yeah, there's no products associated with this or anything, any illustrations for that matter. It is basically, we're just going to talk about the basics, what you need to know. And this is really going to be a 30,000 foot view. We'll do some more here in the future where we're going to hone in on each individual types of different policies, even more so. And we may get into some weeds and kind of tell people what to look for, what not to do. But, what are the things that you need to understand and how you can use these things to your benefit? I think are so many times, life insurance is sold, it's not planned for. And this is going to give you that really good in-depth view on the different types of policies, how you should be using them, and if you already have one, what you could potentially do to make it work harder for you.
Yes, and now this is on YouTube. So you sign up at Real Investment Advice, you attend YouTube. Danny and I also be managing the chat. So any questions that come through, we want to make sure we address them for you. And speaking of questions, I got a very nice, very good question. Really late last night, someone emailed me about there's an article I wrote about the Secure Act 2.0, which is not signed into law yet, but I have a feeling it will be. I don't see anything that's going to derail this. And it talks about the required minimum distribution age and maybe moving that to age 75. Currently it's 72. So they're looking at in 2023, the RMD age would be 73 for people who reach age 72 after December 31st, 2022. And then it steps up to age 74 in 2030 and 75 in 2033. I don't understand the speed bumps. I never seen a garbage disposal. I don't know what it does. It scares me. I love that video. That AOC video is fun. I wanted to redo that with puppets, Brent. I wanted to do it with a puppet.
Let's do it.
Yeah, I think that is one of the... When I'm not feeling good or I'm miserable, I turn that video on and I laugh. laugh. It's funny to have me. All right, so I don't understand the speed bumps, why they're there. They scare me. But it is what it is. But here's the thing. If say I am going to take my RMD at age 73, and I'm 70 years old, used to be 70 and a half. The question was about RMDs and Roth conversion. Technically, the IRS says you cannot convert required minimum distributions into Roth. Now, if you took the money out and you have earned income, you might take part of that money and contribute to Roth. That's possible. But what if I continued those so-called RMDs? What if I made believe that the Secure Act with all its speed bumps didn't exist? And I said, okay, I'm 70 years old. I'm going to take out my required minimum distribution, but I don't have to. But what I'm going to do is take that money and convert it to Roth. See, those speed bumps allow you to maybe still have this RMD mindset and convert. If they were formal required minimum distributions, you wouldn't be able to convert them. But, it might give people more of an opportunity to convert money from IRA to Roth by extending out the RMD age.
Yeah, I do like that aspect. Like you, I don't understand the
Can't
phase
you do it like
or
AOC?
gradual.
Danny, you don't do any impressions.
Can't we get Danny to go? I'm not hip enough, Rich. I don't spend time in the world. I spend time in stocks and bonds and economics and kids, and that's about it. I mean, I'm a chauffeur.
I'm sorry,
when
Michelle.
I'm not working, I'm a chauffeur. I'm working or I'm sleeping.
Michelle wasn't even on that list.
I mean, she's there somewhere. I mean, I see her some days. I mean, that's the way life is.
She's a work widow.
No. We have a good work-life balance. There's just not much else in between.
Yeah, balance. That's what he's calling it. I don't understand balance. It scares me. But it is a good thing. Because it will allow financially savvy consumers or investors to do this. Now, what's the thing that works with this, Danny, because of the non-spousal beneficiary rules, right? We have sort of lost that, so I name my daughter on my IRA as a beneficiary. Before the first Secure Act, I was able to go ahead and she would be able to, if I passed away, draw it out over her life expectancy. Now there's this 10-year rule. What I was hoping in the Secure Act 2, Danny, they would actually take it away. But now it looks like it's there. So if my daughter is in a high-earning job and she has to take that money out over 10 years, well, it's sort of lost its luster as a legacy tool. Now, say Roth, if she inherits my Roth, it's still the same, but at least it's tax-free, right? Mm-hmm. Life insurance becomes a better legacy tool. Roth becomes a better legacy tool. So you can't convert RMDs, but I can make believe I have an RMD if this happens and make my surgical Roth conversion. And then the question she asked was, well, what's a surgical Roth conversion? And that's a good question because, we look at, okay, say you are in RMD mode. You have to take it. My RMD is $50,000 a year. And say I'm in the whatever tax bracket I'm in, right? With all my other income, I'm in the 22% marginal rate. And then my tax advisor, Danny, says to me, hey, I asked Danny, my tax advisor, hey, Danny, how much money can I take above my RMD that doesn't breach me into the next bracket? In other words, how do I maximize this bracket, this surgical extraction? And my tax advisor says, well, Mr. Ratliff says to me, oh, Mr. Rosso, you could take out another $30,000 above your RMD before you hit the next marginal tax rate. Great. So guess what I'm going to do with that $30,000? I'm going to surgically pull it out and move it to Roth. And I'm going to do that every year to build up my Roth money, right?
Yeah, and I think the important thing here is that extra time that you have to do so, and understanding that things have changed quickly with the Secure Act, and now you don't have that flexibility that you once did to have a much larger legacy impact or intent that people are going to, your beneficiaries, your heirs are going to have to take it much quicker if they're not your spouse. And having those funds in that Roth, that's a much better place because you're likely, hopefully, taking it out at lower tax brackets, whereas your heirs may be taking it out at a much higher tax bracket, depending on the amount, depending on how much money they're making, what their income looks like. These are all things that I think will make the funds go much further, right? So that at the end of the day, it's about keeping those funds in your pocket, making sure that we can extend those, because that is the impact of the Secure Act. They want to make sure that they can tax these funds right away. And so your goal should be is, okay, you want to tax them, but let's make sure you tax them at a more favorable tax bracket or tax rate. Because that Roth, you still have to make those distributions. However, you don't have to do it within that, you're not going to be taxed. You still have to do it within that time frame of that 10-year period. But when you pull those distributions out from that beneficiary IRA your heirs do, they're no longer going to have to worry about paying taxes on them. And I think that's going to be a great thing.
It is. So, Bitcoin in your 401k. Elizabeth Warren says no. Is she right? I even hated to say that. Joking. We get back. We'll discuss here on Financial Fitness Friday.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
How do the richest people of the world invest and protect their families? Richard Rosso and Danny Ratliff's next virtual Lunch and Learn on the truth about life insurance will show you how to insure your income, minimize your taxes, and protect your real estate. Thursday, May 12th at noon. The most important insurance policy you'll ever own is the one you'll have when you die. Register now for the truth about life insurance Lunch and Learn at realinvestmentadvice.com. The truth about life insurance with Ratliff and Rosso. Realinvestmentadvice.com.
What worries you about your money? Enhance your financial success with RIA Advisor's free financial planning tool, MyBlocks. It's our online modular manager for your money and your life. Does your vision of retirement match up to reality? MyBlocks can help to determine how much you'll need and how you can achieve. Create your own personal financial vision for the next decade with MyBlocks, our free tool at RIAadvisors.com. Click on the Client Portal tab, RIAadvisors.com.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. RealInvestmentAdvice.com. Click on the Insurance tab.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors. 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
And we're back. Last segment. You know, Bitcoin, crypto, Dogecoin. There's so many of these. What's the other one? Sushi coin? Sasha coin?
I can't even keep up.
I can't either.
They come and go so quick.
Although, if you haven't read about what the Miami mayor is doing with, I think it's Miami Coin, or I can't remember what it is, but actually he's doing a really cool job with incorporating it into the city's budget in a very intelligent way. So it's just interesting to see what he's doing in Miami. I thought that was fascinating. If you have a chance this weekend, just type it into Google, and you can see how he's initiating he's creating his own little cryptocurrency. And what he's hoping is that, and it was very profitable for him actually to do it. He hopes that in the next few years, it's enough to where he doesn't even have to have property taxes for the people of his city. That's pretty cool. I don't know if you read about that, Danny, but he's a young guy, and I think he's looking at it more of how he can use it as a currency within the city. Seems to be creating a good spirit around the city and a very interesting application. For the most part, though, we're not that smart with it, people. For the most part, it was supposed to be this savior, this hedge against inflation, hedge against risk, sticking it to the man. They are the man. And the problem became that it was not, nor is it, a diversifier. Now, it is a turbocharged risk asset. So I told someone yesterday, think about it this way. It's okay. Listen, I own crypto. Disclosure. I know what it, but I know what it is. I don't fool myself. It is a speculative asset. And think of it that when risk is on, if you want to, what is it when you turbocharge it? Like you add a shot of espresso to your coffee, right? That's what it is. It's the espresso. If risk is on, then most likely these cryptos might do better than stocks. When risk is off, the crypto is going to perform worse. It is what it is. It is a risk asset. It's tied to speculation. Now we see the real story of crypto and how it reacts. Now, Fidelity is looking to maybe add Bitcoin to their 401k options. And Elizabeth Warren and Tina Smith are pressing Abigail Johnson to answer questions as to why. So I'm sort of torn here, Danny, because I do think people should have the choice if they want it.
Yeah.
I just don't think it's a smart idea for crypto to be in a 401k. So I don't know if that's a good decision. I personally don't think so. So I'm sort of hate to agree with Elizabeth Warren, but I think people should have the right. If they want it, they can do it. But it's sort of, I don't know. What are your thoughts on this? I'm really sort of torn about it.
I was initially torn, and the reason I was torn was because I don't think that people are quite equipped to handle this. A lot of people, because most people are underfunded in retirement accounts,
and they make bad decisions anyway. Right?
And they do. It's like somebody mentioned on the YouTube channel that they're shocked that so many people have less than $500 to meet expenses.
Yeah.
And when we look at the average balances or even median balances, which present a way different picture in retirement funds for people even 65. We are so underfunded as a country. It scares me because what I fear is that somebody will get speculative. Now, granted, Fidelity is putting some stopgaps on here that you can't put too much funds, too much of your funds. You can't do 100% of your funds into into crypto. But it's going to be enough where you could move the needle one way or the other. And that's what scares me is because we hear the stories of somebody who says, look, I've got 3 years to retirement. We've got to be super aggressive. And you and I know the pitfalls that can occur with that. Now, if you have the wind at your back, great. I pray and hope that it works out for you. And, most of the time the market does go up, but we're in a really volatile time right now. I'm not sure this is the time to go take the additional risk of something like that. However, Senator Warren's issue is to Abigail Johnson, wait a second, you guys mine crypto, so you guys have a conflict. Uh-huh. Well, you know what? It's a private business. They should be able to do what they want. Number one. Number two, okay, so they buy and sell stocks. Should they not be able to sell mutual funds? Where does it stop,
what
right?
did Warren Buffett say? That for the most part, we're gambling now. And Lance actually said it before, not to make his head any bigger, but Lance actually said it before Warren Buffett did. Listen, we're all speculators. We want to own an investment and hope that it goes up in price so that it meets a goal and we liquidate it. That's the truth. Okay, we can't go out and buy a railroad or buy Twitter or anything along those lines. So I get that. Hey, Danny, so just not as a side note, the latest numbers came out about median and average balances in 401ks by age group.
Okay.
So age 45 to 54, what do you think the median 401k balance is? Now, the average is always going to be higher, so median will give you a better.
Well, I know what historically the median is in general, so I'm going to go with 40,000.
Oh, that's not too bad. 56,000.
Okay.
722.
Much better. That's
the
good.
median for someone between 55 and 64. Oh my gosh, 84,000. There's a retirement tragedy going on here, and we do not need Bitcoin. But I agree with you, Danny. People tend to speculate, make poor decisions on a lot of things. The other reason why you might want to own crypto outside 401k is that, hey, if I need to take a loss, say I need to sell it, at least I can realize, the loss. So I don't know. I'm not a big fan of real estate and 401k and IRA assets. I'm not a big fan of those kinds of things either. So, but it doesn't mean that the company shouldn't offer it. Hey, listen, they don't get mad at J.P. Morgan when all you do is when you go into their investments, they're all in the J.P. Morgan funds. You know what the biggest crime is? The DOL looking at ESG funds as a mandatory option in your 401k. There's a crime that we don't want to talk about when you dig into ESG and realize all they're doing is adding more costs to your retirement plan.
Well, and the Department of Labor, who should be there to help the employees, is actually screwing them by raising the price of getting the entry here. So
again,
that's
more
ridiculous.
Political infiltration into an area that shouldn't be. If you really, I told a friend of mine yesterday. We are all foam, no beer. everything we do now, every decision we make is the narrative, the foam at the top. We never actually go into the issue and explore it. It's a sad, and I'm talking about not, people tend to do that, but you don't expect objective organizations that are there to make big decisions that can change your life wrapped up in the foam. Right? It's sort of scary. So when the Department of Labor looks at ESG without looking at the beer or the origins and looking inside it and saying this is an S&P fund with 2 or 3 times the cost, it makes absolutely no sense. But no, she's not. She's okay with that. Because we're going to save the planet by you paying more money. That's how we're going to save the planet. Again. So I agree.
Well, hold on though, but the money that these guys make, that doesn't go back towards helping prevent pollution.
Oh yeah,
becoming cleaner energy.
Larry
it
Fink
goes
and
back
BlackRock.
to them making money and lining their pockets. So
right.
That would be way different if they said, "Listen, we're going to double the fees than what we normally charge, and we're going to give it to climate change." That's what they should do. But
that's right. Like we're going to give it to a climate change organization or some organization that cleans the ocean, or right. You can maybe say, all right, but it's not.
But even then, they shouldn't be able to dictate where somebody's money goes. So the problem is they want to start using this as a qualified deferred investment alternative, meaning that you may be like if you have a 401k, you have the ability right now. If you don't do anything, it's usually going to go into a age-based portfolio or a time-based, like a target-based for retirement when you want to retire. And the talk is potentially adding something like an ESG fund into that mix, which is also potentially much more risky because it's typically going to be all invested in stocks.
Right. It's a crazy world.
It is.
Listen, the crazy train's not just the market, and the market is a reflection of society. So it was just a matter of time before the crazy train crashed into the market. I mean, it is what it is. And the unfortunate part is you can't be, because no one's going to bail out your household when you can't retire, right? No one's going to bail out your household, if you can't make your mortgage or you can't put food on the table.
Those $1,400 stimulus checks will not go that far.
No, they won't. Remember when that second series of stimulus checks came out? There was a, can't remember, it was a radio show, but they did interviews with people about what they did with the money. One guy went out and just bought lottery tickets with the entire stimulus check. Nothing about financial literacy as some sort of mandatory application before you invest. Nothing like that. Yeah. Again, all foam, no beer. I think Danny and I are going to have a beer after the show. How come they haven't made a breakfast beer, Brent?
With like eggs in it or something?
I think it's called Guinness, Rich.
Beer and eggs.
Maybe with like a maple flavor, right?
Yeah.
Maple and pancakes.
Maple beer.
Maple beer. Hey, listen, guys, we really appreciate you being here with us. Thank you on the YouTube channel. Go to Real Investment Advice, sign up for our Truth About Life Insurance, daily commentary, newsletter. We run the gamut. Take a look at our new articles. We'll be back on Monday. Have a great weekend, everybody. Take a breath. It'll get better. I promise.
All the things I could do if I had a little money. It's a rich man's world. It's a